Hey everyone, this is Julian from the Binary Lab right now in a traffic jam, like typical Thailand style. Alright, and for that reason, I have a spare moment. I'm gonna make this video right now instead of later on when I'm at home, so I can get on doing other stuff like making more trading videos and stuff. So in this video, I'm gonna be talking about how you can save your Forex account from a margin call and how to margin call proof your account. Okay, so this week in particular, this week is the week of the August the 5th, right? And this week is a week where, like, it's like the aftermath of the so-called bloodshed. The week started off with, a strong spike down or spike up on many of the currency pairs. Last week on a Friday or on a Thursday, many accounts out there that are running hedging or grid strategies in Forex. By the way, I'm assuming that a lot of people here who are watching this video, you're here because you're running like a EA, or you're on a PAM, or you're on like basically you're either on a grid or a martingale based strategy, and you're basically in a heavy drawdown on your account. Okay, so what I'm going to share with you is going to help you, because this is exactly what I did to basically put my PAM accounts out of danger from the start that they were created. Did we go through some drawdowns this week? Yes, we did. Okay, but the accounts are above starting capital right now. Okay, given the circumstances, that in itself is an achievement. Okay, and I'm going to be teaching you how to do that, how to save your accounts from a margin call. If you're currently close to a margin call, I'm going to tell you steps that you can do to save your account from a margin call. At the same time, I'm also going to share with you how you can margin call proof your account. Okay, so I hope this is something that will be useful for you, and if it is, or if you're in such a situation, let me know in the comments below. Okay, so I mean, at this point of time, I know I'm kind of looking all over the place because I'm watching the road. The cars are moving again, so now I need to pay a bit more attention to the road, but doesn't matter because I have it on my head. Okay, so first of all, let's start with how to save your account from a margin call. First and foremost, I need to know how much of a drawdown you're in, because depending on how much drawdown you're in, the strategies used to save your account from a margin call is going to be very different. If you're in a 30% down, you are not in immediate risk, but you can be in risk of a margin call over the next few days if the trends persist. Okay, and on top of that, if you're currently in a 30% or 50% down, there is a risk that in future, on a occasion that is more serious than the current Brexit, that you can indeed experience a very dangerous situation that will put you close to possibly a margin call. But if you are currently in minus 60%, minus 70%, minus 80%, okay, what I'm going to share with you is going to directly help you out. Okay, if you are in a heavy drawdown, like I said, more than 70%, the first thing that you can do is to deposit more money into your account. Alright, this may not be possible for everyone, but this will help you to alleviate your account. Secondly, I want you to know that it is not part of your objective to save every trade. You are here to save your account from a margin call. There will be loss, accept that there will be loss. But even if you lose some, and it can be quite some, okay, for some of you, you could be losing a significant amount. You could be losing 50%. But if you made more than that amount over the past few months, well, at least you know that you can do it again. So what we want to do is to be able to help you rescue your capital, alright, or to rescue a good proportion of your capital. So what depositing more is going to do is going to help you to enable yourself to have more trading margin. Alright, the next step that you want to do is that if you're running a grid or martingale, you definitely want to close some of the biggest losing trades. This is counterintuitive because a lot of people are wondering, why don't I just close the smaller losing trades? Why do I close the biggest ones? Well, the biggest losing trades, or should I say close the trades with the biggest lot sizes. Chances are, if you're in a margin call situation, you're in a position where you're no longer able to open new positions. So by closing the biggest losing trades, you're now able to make new positions again. Step number 2. This one, what I mentioned, that's step number 2. Step number 3. Temporarily shut off your multipliers. Temporarily shut off taking new trades by setting a max trade amount to be less than what is your current exposure. So currently, if you have 9 trades exposed and you're closing one to free up a trading margin, then you will basically set it back to 8 so that you can. Otherwise, the EA is going to open the same trade that you just closed. What's the point? There's no point. Okay. Now, step number 4: reduce your trade multiplier. If you set up your own EA, you probably know all these terms. So reduce the multiplier to like 1 times, or nothing more than 1.3 times. Or should I say, do not increase it until you have ascertained that the movement is in a recovery. Okay. Which step are we on now? Step number 5 or step number 6? Okay, if I'm skipping a step, alright, it's not because if I'm skipping a number, it's not because I'm skipping a step, but I basically lost track of the count. So the next step that you need to do is you may be required to close more than one of the biggest losing trade. You may need to close 2 or 3. Why? Because the more trades that you close, the shorter the recovery distance is going to be required for the retrace. The retrace basically is that, like on every movement, there's always like Fibonacci ratio and some of the typical levels we look at is 38.2, 50%, 61.8, 78.6, okay, 100, 123.6, 161.8, and 50% is a very, very common level if the movement was big. And I guarantee you that the movement was big, otherwise you will not be in such a heavy drawdown, right? So you will most likely get a 50% retrace. You may not know how to estimate it, and if you need some help on this, maybe you can actually drop a comment or message me on the Facebook page, facebook.com/thebinarylab page. Send me a screenshot of the drawdown that you're in, the settings on your EA, and maybe I can give you some advice on like how many trades you need to close in order to shorten the recovery distance, or what kind of recovery distance you expect. If you have been on a fixed lot grid system, I'm sorry to say that it's going to be a very big it's going to be a very uphill battle. And okay, let's say if you're on a fixed lot martingale system, fixed lot grid system, where a lot of trades have been open already, but is no longer in a position to open trades for maybe the last 100 pips, 200 pips, I'm sad to say that you have to probably close maybe like at least half of the positions. But again, if you want some advice on how to do this, you can reach me on facebook.com/thebinarylab page. Send me a screenshot, and then also of the settings and of the drawdown that you're in on this pair, and I can give you some advice. Okay, after all these steps, alright, you may want to look into like doing some apart from this, you may also want to do some hedging. Okay, if you are watching this video in a time that is not now, okay, maybe you're watching this in the future. Right now we're in the week of the August the 5th, 2019. We just had like some major movements on many pairs is triggered by the Donald Trump and China trade war and also the Brexit. So if you're watching this at a different time and currently you're undergoing like a bigger increasing risk of margin call on a day-to-day basis because your floating loss is increasing, then maybe you could be in a very strong trend right now. And if you are, you want to use hedging at round numbers. Okay, so you may want to start hedging, like maybe not 100%, but I think is a good way to start is to start hedging with about like 40% to begin with. Like 40% of the loss on that pair, or maybe you want to incrementally, like start at 25%, but never more than 50%, because this is in case the trend reverses, then you don't want to be stuck holding on to trades that would eventually work out anyway. So you don't want to do that. So these are some of the strategies that will definitely help you to save your account from margin call. And also, if you happen to be using some kind of a Forex EA robot or whatever that has a cutoff percentage, okay, like make it a lesson to you that you want to set the percentage cutoff to be lower. So in my system that I built, I set my cutoff between 5 and 7%. Occasionally I will shift it beyond if I think that it can recover, but there's very good reasons why it must be kept at between 5 to 7%, because between 5 to 7%, like you're making a fairly small loss, and after these kind of drawdowns, you're able to reset the drawdown on your account, and it's going to be much easier for you to recover. So that's a very good reason for that. Okay, so but if you're very close to getting stopped out, okay, this is a different topic altogether, but it's related. So if you're close to getting stopped out because of a margin or like certain margin protection on your account, you may also use the same approach of manually closing some of the biggest lot trades. When you close the biggest, not the biggest lot trades, close the biggest lot trade. If there's a biggest lot trade that is not in a floating loss or in a small floating loss, you want to close that and, like I said, reset your maximum trades to less. And then if you have more than that, let's say if you have some other big loss trades, close the big loss trades. Why? Because these big lot trades, these big lot trades that are in big loss, these are the ones that are going to accumulate, snowball, and cause you to hit the cutoff fast, and you will lose that. I recommend only doing this if you are very, very sure that there's going to be a big correction ahead. So for example, if you're looking at this in the market right now and you're very close to being stopped out, and you feel that, okay, the market is finding its equilibrium, but I just want to make sure that it can last one more spurt or one more spike down without stopping up, then you want to close the biggest loss trade or biggest two losing trades to give yourself a buffer of, maybe, let's say if your cutoff is at 10%, maybe right now you're set at 10%, 15%, 20%, whatever. So you can actually free up a few percent just by cutting it off. Now, remember, the goal is not to, in this case, to make a profit, but you want to save your account from a margin call. If you can rescue the most of your initial investment, that is in itself already an achievement. Okay, so despite the stress that you may be feeling, okay, it can be much worse. I'm saying this because I have been able to save, again, like I said, I've been able to save the PAM accounts that I manage from heavy damage through the settings that I already have in the beginning as a security setting. Number two, in the past, I've also been involved. I mean, before I created my own EAs, and my own EAs that I even use for PAM accounts that I manage, I have previously been involved in loads of automatic trading systems, invested in them for many years, different ones. I see many ones fail, and the reason why they fail is because they over leverage, and you're basically trading against a strong trend, which is kind of like suicide. We know that for great martingale systems, it is crucial to periodically take trades against the trend, because it is, after all, a mathematical system. Okay, and but the drawdown is that, when it goes outside a certain range that is rescuable, you have gone into an unrescuable range. This is why my account, always I put a cutoff 5% to 7% is crucial. If you're also running your own EA and you find that with 5% to 7% you're not able to get a decent profit, well, let's ask about how much you have in that account. If you do not have at least 5k in the account, that goes without saying that you won't be able to make much within a 5 to 7 range. So but at the same time, if you're trading, like, let's say 500 or 1,000 or 2,000, okay, nothing wrong with that, okay, but obviously, with small deposit, you cannot expect to get decent gains without setting the cutoff to be much higher, at about 10-20%. In fact, most of my members will actually do that as well, 10-20% if it's a small account. I mean, small account, you need to accept that you need to risk more. This is a fact of life, fact of trading. Okay, so don't feel bad about yourself if you're running a small account in a heavy drawdown. And I mean, for some of you, well, let it be a lesson. Okay, let it be a lesson that you may want to tweak your settings in future, that within a certain range you still are able to be profitable. Okay, let's say if you're more than 5 to 7, if you're more than a 5k account, if you set your cutoff like 5 to 7%, you should be able to you should be able to make money on a daily basis. You should be able to make like 0.2, 0.3%. This should be expected. If you cannot, adjust your settings. Okay. If you're making too much, it's also a problem. So you may want to actually moderate down in future, moving forward from this experience. Now, finally, after you've done all these steps, you want to have a new set of settings for, like, let's say when the market is less crazy and the market is crazy. Right now we can say the market is crazy, is a big amount of movement, extraordinary amount of movement. That's why we're even they're having this discussion right now, because your account has the market has moved outside of the range that the EA is able to handle. This is the reason why it needs to be cut. Okay, and but going back into ordinary times, okay, define normal, check your calendar a lot more regularly. Like, for example, for the PAM and also for my group, what we're going to be doing here, so we're going to be doing our planning, like looking at the economic calendar, literally like months in advance, and we're going to mark out what events we need to stay out of, what events we're going to be in. All right, so we can identify at what point of the year certain strategies should not be run and what certain strategy should be run instead. So this is the way that it will be run. Okay, so lastly, for those of you who are watching this video, if let's say topping out your account is not possible, or let's say you've already had a margin call very recently, and you're just looking at this video because you want to learn how to safeguard yourself and bulletproof your account from margin calls in the future. For example, like I said, again, the strategy that I use in my EA, that I give out to people in the Forex Lab, Forex Learning Group, for free when they invest more than 1,000. In my strategy, it is martingale-proof. It's margin-call-proof, because of the cutoff system that we have. We're able to cut off when we're in a losing trend. No point to stay in a losing trend. Okay, when a trend is too serious, no point to stay into it. So this is how we can protect ourselves. But like I said, moving forward, have two sets of settings, to have maybe two sets of systems. And at the same time, one more thing you may also want to do is that if you recently got margin called by a system that you're running, then there's no any more point to run the system. I had a close friend, very stubborn friend as well. For the past 6 months, I've been asking him, like that he should be using my system instead. The reason for that is not anything about commissions or referral fees with brokers and all that. As a matter of fact, I'd like to be honest with you that I do receive commissions from brokers based on the trade turnovers, okay? And that's how I'm able to give away these tools for free. But these are very good tools that I said is it's margin call proof, right? And this friend of mine, I don't know why, just he's a really lazy guy, the kind of guy that never withdraws from his account. So that's another lesson that you must know: withdraw from your account regularly, so that way you know that wherever there's no profit is profit until it's in your bank account and out of your trading account. You can shuffle them within your broker because many brokers allow you function to have several accounts, and some of it will be for trading, some of it will be for storage, okay? Because some of you, like in Australia or wherever, money is very heavily taxed. So once it hits your bank account, you get questioned and you get taxed for it. So what's the point? So if that is the case, all right, what you must do is that you must have a separate account in the broker that you can store it there as a spare, and then you can maybe withdraw it to an e-payments card and use it at the ATM, all right? And subsequently, maybe next time, if you have a bad situation like this, like a rainy day situation like this, you can use this money, transfer it back to your main trading account, and you can restart it again. Does it make sense? So I hope you guys like the strategies I'm sharing with you in this video, and I hope that the strategies I share with you is able to help you save your account from a margin call, or at least able to protect you from margin call in the future. You may also want to look at my system, which is margin call proof, and at the same time, for those of you who have been letting other people manage your account in a PAM that recently blew your account, then probably you actually want to oh gosh, the guy behind me is so bad at parking his car, nearly hit me. So if someone that's running a PAM recently, blew your account, there's no reason to let him run it again. Like I said, this friend of mine, like I've been telling him from the time that he was 20% down, when my account was only 4% down. Like I said, in ordinary situations, your account should not be any more than 3 to 9% drawdown. 3 to 9% is the norm. You should not be more than that. If it's normal times and you're in 20%, that is a red flag that your account is being mismanaged. Or the settings are wrong. I'm talking about if you're on a PAM, okay? Because if you're on an EA, sometimes there are minimal lot sizes and all that. So this friend, his account was mismanaged. He has a 10K account, and when my account was in 4% drawdown, his was in 20. Makes no sense. And then subsequently, when he was in a 40% drawdown, I was only in a 10. Alright? Or 11. Makes no sense. Finally, when I was in a 15 or 20% drawdown, extraordinary situation. This was just before a lot of the trades that we had, a lot of the baskets of trades were going to be cut off by the system using the safety stops that I programmed into my system. Okay, so like I said, this week was a nasty week for the PAMs that I run on FX Primus and FXTM. You can check them out. I'm not running away from it. But at the same time, although it's unfortunate, but I am in a way glad that my safety controls have saved this account. So when I was about the 20% range, this was about before some of the pairs were going to be cut. Okay, his was already at 67% down, and then before long it was like 80% down, 85% down. Needless to say, by Friday it was toast. So on Wednesday, on a Tuesday, his GBP JPY, he had a big basket of that. There was like 67% down, and at that time it was like 120, no, 132. Okay, and on a Wednesday it was 131. It went all the way down to 128. You guess, all right? Obviously, the account went belly up. It was on fixed lot. There's no point. Okay, if it's fixed lot by certain 100 pips, you gotta cut everything so that you can ride it back on the way up. But it's just kept opening trades until you ran out of margin. So that was like, how do we save that kind of case? Well, only way to save that kind of case is to cut some of the bigger trades reduce, so you can reduce reduce the recovery distance, free up margin, deposit more money, and this can help you get a recovery. But like I said, is it worth it? Okay, at the end of the day, is it worth it to save the trades that are on your account? Like if you can stomach the loss, better to restart. Better to restart from that point, and like, because it may not, maybe there's going to be some retrace, but okay, either you cut now or maybe you cut 1 week, 2 weeks from now. Make a plan to cut some of this loss. If it's recovering, make a plan to cut some of this loss, because I said the Fibonacci retracement is such that like it may only retrace 50%. So if at 50% you don't decide to cut this loss, then it's gonna get really messed up. So again, if you guys need any help or advice on this, like I can advise you in the capacity of someone who designs my own systems and manage PAM accounts. If you can show me your drawdown, screenshot your drawdown, screenshot the trades, screenshot your settings, I can advise you what you need to do. Okay, because sometimes I know you may be very stressed and you don't know how to handle it, so just send a message. And in future, you may want to use a different system, something like the one that I have, that I actually give out to the people in Forex Lab Forex Learning Group for free when you deposit over $1,000 in your account. Okay, why 1,000? Why not 500? Because with 500, you're at so high a risk of your account blowing to begin with. There's no point in looking to automated trading, and just stick with manual trading. So for those of you who have a lower budget, okay, don't need to be sore or upset that you cannot get my free EA, or my EA for free, so to speak. You should instead come and learn manual trading and learn how to catch big pips. Because when you learn how to catch big pips, you will start to lose all the scarcity mindset of your account getting blown, or you're getting shitty returns in Forex, or over risking and all that. So you will get to learn how to risk small and earn big in my project Catch Big Pips. Watch my previous videos on this. Okay, so finally, if you want to join, go over the Facebook page. Oh gosh. I've been saying facebook.com/the Binary Lab page. Well, yes. Okay, fine. I am on both pages anyway. But if it's Forex, you should be going to facebook.com/Forex Lab official, Forex Lab official, whatever it is. If you already draft message to Binary Lab, my admin will tell me anyway. So I'll let my admin know that some of you will be sending me screenshots and asking for advice, and I'll ask them to alert me when this messages come in, so I can help you with it. So finally, I want to close this video in saying that success in Forex is a science. This is what I believe in the Forex Lab. Success in Forex is a science. So it's not, certain situations in the market can be really shocking, but it is all within a science, and if it's all within a science, it can be saved and managed. Bye for now.